Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. This week, there was a host of data from the US, Eurozone, and India. Inflation figures from the US has resulted in some repricing of rate cuts. Adding to that was a slightly dovish Jay Powell, who ruled out any rate hikes. Morning, JK. Given the data released this week, how are you reading the broad sentiments in the market?
Good morning. Uh, I think we are at a point where we have to assess whether the dollar is changing its direction decisively or not. Uh, we are, of course, still in a very broad range as far as the dollar index is concerned, between 102 and 107. But the recent developments gives a sense whether the dollar will have, more directional move to the downside, because what we have observed, a lot of hard numbers from US have come weaker. GDP, retail sales, industrial production yesterday, non-farm payrolls, consumer confidence, along with CPI also softening as per the latest report. On the other side, Europe has seen good data on the industrial production, retail sales, also the surveys related to economic sentiment, Germany improving solidly. All these things, comparatively, if you see, Europe has been, improving, and US has been somewhat slipping on the economic side. Perhaps the higher for longer theme actually impacting the economy. Of course, we are only talking about 1 month's data. Then let's see how things come. Today, we'll also have a leading economic indicator, which is a forward-looking number from the dollar. So what I'm trying to assess is whether the dollar is turning its direction to the downside decisively based on this trigger. But that was not to be, at least in the first attempt, because the key 200-day moving average for the dollar index at 104.20 held yesterday, and we have seen some bounce in the dollar, a slight slippage in the euro, and of course the dollar yen coming up again from below 154 to 155 and a half, and that's also based on the Japanese GDP number coming weak. So my sense is that we will observe the upcoming data from Europe as well as the US, of course from other regions as well, like Australia and Canada, all of them showing some improvement. So that's what we up on the radar for us as far as the dollar is concerned. But if you talk about the rupee, there is a stark underperformance of the rupee. It's interesting to observe how rupee is dealing from various other currencies in the near term. Post lower CPI, we saw Asian currencies rally: Korean won, Indonesian rupiah, Thai baht. All of them, of course, rallied by more than 1%, but along with, dollar index also falling by about 1%. In fact, dollar index has fallen by about 2% if you consider in the last 1 month, but the rupee has remained where it was about a month back, and that speaks volumes for its underperformance. Yes, there are reasons. There have been one-sided buying interest from the market. FIs have been big sellers in Indian stocks to the tune of 3 billion. That much of outflow has been seen, but the supplies from RBI to meet this demand has been also consistent. That's keeping the dollar rupee totally almost pegged around 83.50 levels, and keeping it underperforming against other currencies. Yes, we are expecting the situation to change as we move into the next month with the election results coming, but that's something that we'll have to wait and see whether RBI let its grip loosen after the event, and also when we start getting the large flows on the JP Morgan index related bond investments. Interestingly, let me end with one observation on the stock index. Japan hit 40,000 in March this year, that for the first time. But this was just a touch above what the high it hit in 1989, meaning the index hardly gave any return on an annualized basis in the last 35 years. Average return. Okay, so average return from 35 years back to now, it's almost like nothing. But Dow Jones hit 40,000 in yesterday's trading. In the same 35 years, it has given 2000% return on an average of 57% annualized return. Now, the journey of these two indices will be interesting in the coming months to observe whether Japan does more catch up or Dow sharply corrects its big gains. That's what we will be looking. We are particularly looking at Dow because that's one of the benchmark for the global markets. That's it. Have a nice weekend.
Thank you, JK. And I think the broad sense of the themes which I'm getting is that the growth data from the US has been weaker: GDP, retail sales, industrial production, consumer confidence. So all of these data has been on the weaker end, while on the Germany and the European side, we are seeing some improvement, at least when it comes to the recent data. Rupee seems to be delinked, and there is a stark underperformer as other Asians cooled off. Rupee has remained where it was. And of course, India is facing a event related risk, which is the elections. That's it from us today. Have a very good weekend. Tune in on Tuesday because on Monday Mumbai is going for its voting. So the markets will also be shut in Bombay. So we'll see you all on Tuesday with the fresh round of updates. Thanks for listening.